All right. Good morning, everybody. Hopefully, everyone is doing well. Good morning, good afternoon, just depending on where you're tuning in from. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all today. Today, we're going to be talking about key tips on knowing when to take your profits. So, if you're ready to learn, welcome. you're in the right spot. Before we get started and jump into today's topic, just want to make sure everybody out there can hear me, both on Facebook and on YouTube. Let me make sure we have confirmation of that, and then we'll go ahead and get started here this morning. So hopefully everyone is doing well. Good morning, Seth, Darlene, Rye, Terry, Anthony. Hopefully you guys are doing well. Drew, good morning. Thank you for tuning in here today. Glad to have you here. Hopefully the Jockey Club was good for everybody that's tuning in, just coming from the Jockey Club a little bit ago. Hopefully you guys had a little bit of a break and now welcome, able to join here. Good morning from Shenandoah Valley, Virginia. Welcome, George. All right. So for anybody new just tuning in for the very first time, what we do here every Thursday is we talk about the VectorVest Stock Advisory app and show you guys how to become better traders, investors, whatever your cup of tea, whatever you're trying to do with your investing, what that is, we can help you out with it. Our mission here is to allow you guys to become financially independent utilizing the stock market. And so we cover what's going on in the market today, then we dive into our topic of discussion, and then as always, we wait to the very end and we'll answer any questions you guys have, but also analyze any stocks that you guys want to take a look at, and I'll show you how you can do so on the fly in less than 10 seconds. So if you're ready, let's go ahead, hit that like button, smash that like button, share this out with all your friends, your family, because you never know when somebody that you've been friends with for a long time may be struggling with their investments and needs some extra help, and this could be that opportunity to give them that extra help. So as always, hit that like button, share it, subscribe, everything, and let's get into it here today. All right, so as we can see right now, the market is 3 ticks into the red. Therefore, the market is bearish. And obviously, we don't advocate buying any stocks at this time. If we scroll down a little bit, we get to the color guard here. We can see the sea of red that's been appearing over the last week or two. And when we see those red lights, that tells us the indicators are moving lower day over day and week over week. I know, David, I know, right? And so we use these 3 indicators to get an idea on the overall health and the overall sense of where the market's at and where it's heading. So we use 3 indicators. The first one we take a look at is price. The price is based upon the VectorVest composite, which is an arithmetic indexed average of about 8,700 stocks out there. This gives you a better understanding of what's actually happening in the market, because it's not just looking at, let's say, the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at a conglomerate of 8,700 stocks. The second indicator is the RT, which stands for relative timing. Now, the relative timing is the short-term price trend, and it's cast on a scale of 0 to 2. To make it easy for you guys, above 1 is good, below 1 is bad. So as we can see, RT at 0.92 tells us that the short-term trend is down, and if we look at the overall moves, we can see it's moving lower day over day and week over week. So that tells us momentum is picking up to the downside as well. And then third is our buy to sell ratio. So if you're not familiar with VectorVest, every single day we give a buy, hold, and sell rating on every single stock that we track. This is all based upon a systematic rules approach rather than just analysts' opinions. And this helps you get accurate information as a retail trader or as an individual investor. This allows you to be able to compare apples to apples rather than trying to take one source and matching it up with another source and seeing where the differences are and trying to weight one over the other. Instead of apples to oranges, stick with something that keeps everything uniform and systematic to give you the actual information, usable information that you really need to use or that you really need on your side. So as we can see with the buy to sell ratio, it is below the level of 1, currently sitting at 0.43. And that tells us there's a little bit more than twice as many sell rated stocks in a database to buy rated stocks, or that there's overall market weakness. Stocks and crypto crashing this week. Well, time to be buying some puts, it sounds like then. All right. So all 3 of these indicators are comprised to come up with the MTI or the market timing indicator. Once again, the MTI is going to be on a scaling of 0 to 2, and above 1 tells us the underlying trend of the market is up. Below 1 tells us the underlying trend of the market is down. So as we've been talking about the last couple of weeks, we've seen weakness in the MTI and all of our indicators, and they're finally starting to break below that level of 1 this week. As you can see, we did get a confirmed down call as of the 13th. So that would have been yesterday or the day before yesterday. So Tuesday, getting my dates all confused here. So we did receive a confirmed down signal as of Tuesday, and that's something that's important to follow and important to keep an eye on, because the confirmed down or confirmed signals just in general are going to be VectorVest's last signal we give to our subscribers to either get into the market if it's a confirmed up, or to start protecting yourself or getting out of the market if it's a confirmed down. So that's definitely something we don't want to ignore, and this is why it pays to have VectorVest, so you can see this on a daily basis rather than just getting an update once a week here. After the MTI, we then get the trend column though, which shows two parts of the trend each and every day. The first part is looking at what we call the primary wave, which is just simply the weekly trend of the market. It's looking at the price and comparing it to 5 trading days earlier. So since it's down, we know that the price is down on a week or on a 5-day trading basis, or that it's moving lower on a week-to-week basis. Second part is looking at the MTI, which once again is looking at the underlying trend. Since the MTI is below 1, the second part of the trend column is also down as well. And then last but not least, we get that calls column, which we just talked about, which stands for our confirmed calls. Last signal we get to get in, last signal we get to get out. As you can see, that did change as of the 13th or as of Tuesday. It's a 2 Red Bull day. Hey, if Red Bull's watching, if you want to sponsor the stream, by all means, we would definitely take it. I would love to have more of this on a regular basis here. You're welcome, Monica. Glad you got it there. Had a first drink and it while she listened to the Jock Club. Awesome. I love hearing that. Hope you guys enjoyed it. All right. So after we talk about what's going on in the overall market, let's scroll down, take a look at the advanced declines. The advanced declines is extremely important on a day-to-day basis. This tells us the number of stocks moving higher for the day and the number of stocks moving lower for the day. So, for example, if we're looking for a day to go buy, we want to see twice as many stocks moving higher than lower, or twice as many advances to declines. That shows that the probabilities are in your favor, that if you get into a stock that day, that the odds are that it's going to go higher, and you want to have that nice running start right out of the gate. Well, market's moving down here today, so we want to see twice as many stocks declining than advancing. And so right now we're sitting at about 57% of stocks moving lower and 31% of stocks moving higher, just shy of that 2-to-1 ratio we prefer to see. Exactly. That's right. The two official, unofficial beverages of BV Nation. That's 100% accurate right there. All right, so as we scroll down, take a look at the major indices. We see the Dow is basically flat, up just shy of 0.1%. The Nasdaq's sitting at a loss of 0.64%. S&P is down about 1/3%, and the VectorVest Composite also down about 1/3% here. So, besides the Dow, everything else is looking just lackluster, moving lower. No surprises there. Now we know what's going on in the market. Let's talk about our topic of discussion. Today we're going to give you some tips on knowing when to sell. Sometimes selling can be the hardest part of trading for the average investor, most investors out there, because it's great while you see gains, but once you start seeing that red, the psychological aspects of things changes, and you think statements like, oh, it's down this much, it's got to rebound. It can't go down anymore. Well, typically it does. Or, I was up 50%, now I'm up 20%, I'm still in the green. Oh, I got plenty of time, let it ride. Those types of things are emotional decisions or emotional investing, and that's exactly what we try to stay away from here at VectorVest, and we try to help our subscribers stay away from that as well, because we want to focus on a systematic approach or use a non-emotional approach. Well, some of the ways you can do that are by looking at technical analysis, using the indicators, and a few other things that we'll discuss here in a moment. So while I'm getting into that, if you guys have stocks that you want to use as examples here today, put a couple of those in the chat right now. Let me know what stocks you guys want to see as an example, and we can take a look at those and break them down from there. Awesome. All right, so let's go ahead. What we'll do is we'll start off with my watch list here today and take a look. Oh, got to restart it. For some reason, internet is not doing well. It always does this every single week. I don't know why it does it. After I keep it on for a while, it just It locks out, but then I have to go back and restart it. I got to take a look into that later today. All right, so we'll go into my watch list to start us off. And actually, we have some coming up already on our YouTube side. So let's go ahead and add some of those in here. So ORCL was the first one recommended. So let's go ahead and use that as our first example. All right. Going back, starting off on the main screen, whenever you pull up a stock analysis or you start to type in a stock, this is going to be the screen that you see. Well, you can actually find some great information directly from this screen. One of the first key tips to keep in mind is keeping your eye on the RT. Once again, the RT is that relative timing or the short-term pricing of a stock. It's on a scaling of 0 to 2. So above 1 means the stock is in an uptrend, or simply put, making you money. Below 1 would mean the stock is in a downtrend or losing you money. And nobody likes to make money. So right from this screen alone, you can get a good idea of, maybe you should pay attention to this more. Maybe, if you've had a great gain, maybe you should consider locking that profit in if you look at the RT and it's below the level of 1. So that's just a very simple way of starting off. Well, we talked about technical analysis. Technical analysis is a very great tool to use, especially if you're more of a short-term trader or swing trader, that you can really leverage the information to give you more precise entries and also more precise exits. So before we get into the more complicated or the more technical analysis, let's start off with something simple here today. What we'll do is we'll go into the graph settings, add a moving average. One of the great places to start is simply a 40-day simple moving average. Now this can be adjusted depending on the stock. Some stocks are more volatile, some stocks are more consistent. So you may need to slow that down or speed it up depending on the stock that you're trading or investing in. But 40-day moving average is a great place to start, especially if you're getting into the market or new to the markets. So we go back, take a look at the stock. This is on a 6-month. Let's go to a 1 year. So the basic way of utilizing moving averages, or just a moving average to help you time your entry and exits, is whenever the price happens to cross above that moving average, that would be a buy signal. And when it crosses below, that would be a sell signal. Facebook Live is not working. Let me see here. I show it working for me there, Sif. It shows that it's streaming and that it's connected. Yeah, I'm not showing any issues on my end. If anybody else can verify that, I'm not seeing any issues with the Facebook side on my end, but if there is issues, let me go ahead and refresh this. Yeah, it shows that I'm live right now. Facebook's not working for you either? Let's see. Well, I'm glad we've got 2 streams on here, then. This is definitely coming in handy then. Yeah, because I'm looking at it right here. I'm not sure why it's not working on that side. All right. Well, there we go. No wonder everybody's tuning in from the YouTube side here. All right, I'm not sure why it's going on. I'm showing that it's working on the Facebook side, so not quite sure why you guys aren't seeing it there. Maybe Facebook just in general is having issues. Who knows? Interesting. Let's see. Yeah. Okay. All right. Well, I don't know. I apologize for anybody that was on the YouTube or on the Facebook side. It shows that it's live for me, but then again, it also shows that nobody's been commenting or anything like that. So I'm not sure why that's happening, but hey, we'll just continue on for today and stick with the YouTube side. I mean, the only thing I can toss it up to is a Facebook issue because we're live on YouTube and it's showing me that I'm live on Facebook. I don't know what's going on with that. All right. All right. So let's get back into it though. ORCL, using moving averages. When it crosses above, that's a buy. When it crosses below, that's a sell. So let's go ahead and take a look just at this most recent example here, or the second most recent example. For ORCL, crossed above the 40-day moving average, which obviously could be adjusted depending on each individual stock, but it shows that the close here was at 64.50. If we continue to move higher and see where it closed below, $77. So definitely a win right there. Going to sell my Facebook stock. Yeah. Buy Google, I guess. I'm not sure why that's going on there. That's interesting there. Definitely gives me something to take a look into later. All right. So as you can see, at that point, you don't know that the stock's going to rebound and come back. So you have a clear, non-emotional signal telling you, hey, something's going on with this stock. You need to be very careful. And if your plan, you've already made some good money on it, no need to risk giving it all back. You have a clear, concise, non-emotional decision that is making the answer for you. And this is what helps a lot of successful traders be more consistent in their trades, is having a plan rather than going off of emotion or going off of hopes and dreams on that one. So okay, you locked in your profit, but then all of a sudden you got another opportunity here at 81. Now it's running up, changing hands at 86.21. So you're still in the green, got a new entry, locked that profit in from that last run, and now you have more capital to deploy to get into the new position here. Or get into, if you wanted to get back into the same stock, you could, and now you have more cash to put into it to basically compound your returns on that. Yeah, not sure what's going on with that one there. So just using a simple moving average is, seems like it's self-explanatory, seems like it's basic, but a lot of people forget that, and a lot of people, don't recognize that or don't even know to use that. And this is a great tip, especially if you're brand new into the markets. All right, so I'm not sure why that's happening there. Yeah, I don't know why Facebook is showing that then. Because I got the Facebook notification 26 minutes ago. Yeah, I'm not sure what's going on. I'm going to have our social media guru take a look and get in contact with Facebook to see what's going on, because it's showing me I'm live. All right, so you can use a simple moving average. That is a great way to help time when you should be getting in, when you should be getting out. The other thing you can do is using a pair of moving averages. So if we go back to our settings in the upper right, go to the moving averages. Let's say we're a little bit more shorter term focused. I know I talk about this a lot, but it's an easy example. Everybody who has been here for a while should be familiar with it. If you're not, a 3/8 exponential moving average. Using a pair of them, and when you use a pair of moving averages, you always want to have one that's a short-term moving average and one that's a long-term moving average. The long-term is more of your base, and then the short-term is your signal. So when the short-term goes above the or short-term goes above the long-term, that shows you short-term momentum to the upside. When the short-term moving average goes below that longer-term moving average, that shows momentum to the downside. And to keep it simple, when the short term is above the long term, that's a buy. When the short term goes below the long term, that's a sell. So if we go back, take a look at that on the graph here. We're going to zoom in because this is going to 3/8 or more of a shorter, more aggressive pair of moving averages to use. But as you can see, it helps significantly. Just looking at ORCL still, we had a great run up here from 78 all the way up until the day it crossed down to 81. So $3 there in a very short period of time. You got out right before that drop down or the gap down, got back in on the 77, taking advantage of the same run now. But as you can see, as price is pulling back, this is more reactive. Where the other two were still expanding, even with today's down day, these are going to be more reactive and give you a shorter term buy and shorter term sell signal a lot faster. So if you're following this on your own stocks, if you're more of that aggressive trader, this could be a great way to do, or a great way to make money in a very short period of time, especially if you're one that can watch your stocks more throughout the day and you can go in and out of the stocks throughout the day as well. So 3 and the 8, as you can see, using a pair can help you really get an upper edge and help you avoid, sitting through pullbacks like this. So you lock in your capital here and then you buy back again here, avoiding that downfall and have more money to redeploy back into the trade. All right, we got another stock or another idea of SWBI. Let's go ahead, take a look at that, and we'll use that for another example. So SWBI. So SWBI, we can look at it just from the right out of the gate. RT of 1.12. Well, as we talk about every single week, whenever the RT is above the level of 1, that's short term to the upside. Below 1 means the stock is moving lower. And more specifically though, when we see the RT above the level of 1.1, that's really where you want to start considering jumping in. Or if the stock is below the level of 1.1, that tells us that the stock may be just moving sideways more so than anything else. There may not be a lot of upside potential there, or there may not be a lot of movement behind that, and you may be sitting patiently waiting for something to happen for that move for the move to finally occur. So let's go take a look. We have relative timing at the bottom. Now, as we can see, the 3 and the 8 exponential moving average captured this nice run here. It's been negative, but let's say you're a little bit more longer term focused. You're looking at the RT. The RT is steadily dropping as well, getting closer and closer to that level of 1. Thanks, Goldie. Glad you're here today. So when you're looking at this, the relative timing just in general can really help give you a clear sign if you're seeing that pullback. Let's say you got in here and you got in, let's say at $20 even. Well, okay, now it's trading at 26. You're still ahead, and yes, you still have profit. And without a plan, you would say, all right, I'm not in the negative yet, but I'm down a little bit from the highs. I'll keep letting it ride. I've seen a lot of this emotional trading, a lot of this emotional approach over the last 7 months, really since the meme stocks kicked off and a lot of people YOLOing their entire life savings into random stocks that they found on the internet. And having an approach like this can help them maximize that and avoid those pitfalls of losing it all, because I've seen it happen quite a lot this year. And that's where it really comes into be a benefit. Is you see the RT, it's dropping, it's moving closer and closer to the level of 1. If you haven't started tightening up your stops, locking some of that profit in at this point, you see that, and if it crosses below 1, that is really that final confirmation that, hey, I need to do something here. I can't just sit on the sidelines, sit on my hands, and hope that something else happens in favor of what I'm looking for. So RT can help you make that more emotionless decision, because you have concrete evidence that proves exactly, what you need to know. It says, hey, something's going on. Stock's losing momentum pretty quickly. It's getting close. Maybe I should start tightening it up at this point. And if it crosses below the level of 1, maybe I should just take my profit, move on. So this can help you make non-emotional decisions. And that's exactly really what the whole purpose of VectorVest is, as I talked about before. You want non-emotional trading, because that has proven more successful than just buying and selling randomly just based off of gut feeling. All right, so that is, the third option. We've talked about 2 different ways of using moving averages. We've talked about RT. One of the other things, the final signal to tell you, hey, you need to take your profit, is simply using the rating system that VectorVest provides. As I talked about a little bit ago, VectorVest gives a buy, hold, and sell rating on every single stock every single day. And now we do it way differently than anybody else out there. Especially if you're new, just to give you a little insight, we use a rules-generated system. So to get a buy, for example, if we go back, to get a buy for SWBI, there's 4 things that have to happen. You have to have the RT greater than 1. You have to have the VST greater than 1. You have to have the price greater than its stop price, which you can find in the upper right-hand corner of the screen right now. And the price has to be pulling away from that stop price. So right now the price is greater than the stop price. Price has been pulling away from that stop price. RT is above 1, VST is above 1. So therefore, it meets that criteria to get that buy rating. So we see that. If we go back here though, zoom out, let's say to a 1 year, you see that red, yellow, and green bar at the top. Those are green, obviously would be for buy, yellow is going to be for hold, and red's going to be for sell. You can see that transition from buy, all of a sudden hold, sell, sell for a long time, all the way at the bottoms here, and then it starts transitioning back. You start noticing it's becoming less and less of a sell, bouncing between sell and hold, and then all of a sudden it stays hold for a while, gets a brief buy period, and then it bounces around between a buy and a hold, and then you see this nice run up. Utilizing this can help you avoid being in this trade for longer than you want to be. Putting it on a 5-year basis, you can just see the times like here, you don't want to be in that stock. Well, it had a sell rating. If you were still holding and you see that sell rating, that's our final signal that we give you here at VectorVest to tell you you either need to sell now or hold at your own risk. Now, everybody is different, and some people may have had buy opportunities, let's say down here, and you're up significantly. So when you see that sell rating and you're buying at those lows, if you were somebody who got lucky enough to buy at the $6 range and was trading at almost 25, 27, then that tells you, maybe I should at least tighten up my stops. Because if it does come back down, you don't want to give all that profit back. So while you see these signals, some people who are more aggressive and they see that sell signal, they may actually follow that sell and they may close their position. But somebody who has a different entry from a long time ago that has a good cost average and all that, they may see that as a warning sign to tighten up their stops. That way, in case it does continue to sell off, they lock their profit in. But if it turns back around, then they stay in the position. And this is all going to the point where you can't go broke taking profits. A lot of people don't realize that, and a lot of people need to make sure that they have a plan in place to lock those profits in. Now, if you're brand new, some of the good general rules of thumb that we typically cover here at VectorVest are, the first one we talk about is what we call the 1% rule. Simply put, you never want to lose more than 1% of your entire portfolio value in any one stock. So let's say you have $100,000 you were trading at first, and you bought 10 stocks, so you put $10,000 in each stock. Therefore, 1% of the 100,000 is 1,000, which is 10% of the 10% you put into each stock. So therefore, you never want to lose more than 10% in any one of your individual holdings, which is the equivalent of 1% of your entire portfolio value. Now, you can obviously do less than this. I see a lot of people talking about, using a 7%, 8%, 6%. That is fine, but never more than that 1% of the overall portfolio value. So that should be just a good general rule of thumb of utilizing stop criteria just in general. On the upside though, because a lot of people fail to do this. A lot of people put in stops on the downside, but once the stock is in the green, they don't put any target or they don't set themselves a goal of where they're going to take their profits at, and they end up giving it all back. So some of the rules that can help you out with that are, we talked about the 1% rule, but now the 50% rule. Simply put, anything over 10% gain in a stock, never give back more than 50% of that profit. For example, let's put some numbers behind it. You bought a stock and it goes up 10%. Basic example here. Pulls back and you're only up 5%. Lock that 5% in. Like I just mentioned earlier, you can't go broke taking profits, and that's exactly how you do so. I'd rather take a 5% gain than let that turn into a 5% loss or worse. You can always get back into the stock at a later time, but at least you're locking your gains in, and that's really the main thing that you want to take away from this. Now, if it goes up 20% and all of a sudden pulls back to 10%, take that 10%. And now the 50% rule though, just as we talked about with the 1% rule, it doesn't mean that, you have to wait that much time. Let's say you were up 50% in a stock and now you're down to only up 40% in a stock. You don't want to let it come back all the way down to being only up 25%. So you take your 40%, wait for that correction, or wait for the stock to settle or give you more information to be able to, get back in or figure out which way it's going. And then you can jump on board at that point. Once again, with more capital to get that compounded rate of return. So utilizing the 50% rule is a great place to start. Obviously, you could do less than 50%, but no more than 50%. Those are some of the key rules of knowing when to sell or knowing when to take your profits that are just, standard, can be used by anybody, no matter whether you're a day trader, swing trader, long-term buy and hold investor, regardless of who you are, what you do. Anybody can take advantage of those rules, and they can add a lot of benefit to you as well. Because, as we always say, you can't go broke taking profits. And instead of letting a profit turn into a loss, take that profit, move on. Awesome. Glad to hear that, Goldie. Thank you for that. Yeah, Joseph, as always, guys, if you guys want to see your stocks analyzed, just make sure to stick around to the end. I'll analyze any stock that you want to take a look at in less than 10 seconds. All right, so we've got SWBI. We've seen the moving averages. We've talked about the RT. We've talked about the sell rating. We've talked about, just some general rules of thumb for sell criteria. Last thing we can use, and I've talked about this a lot, but utilizing stops by the form of technical analysis. So let's go ahead, go into the graph settings. We'll keep the moving averages on there. That's fine. You have support resistance. You can use that. If it, breaks above support, that's your entry. If it breaks below support, that's your sell. You could use envelopes. Not really. Well, if it hits an extreme level, that could tell you, hey, it's time to take some profit off the table. But what we're going to use here today is, for our example, MACD. MACD is a great indicator that can be used both long-term and short-term. So it's a great overall indicator no matter who you are out there. That's why I like talking about it, and I like using it as the example here. So let's go back up, find that third candidate, and we'll use MACD to help us figure out when could be some good times to take profits, when could be some good times to jump on board to compound those profits. So EVC was the third one. Let's go ahead, type that in, pull that up here for us. EVC, all right. Right now we're looking at a 5-year. Let's go to a 1-year. Maximize that chart here. So when looking at MACD, you have two lines here, which is a MACD line and a signal line. The blue line, it's kind of hard to see. That's the MACD line. The black line is the signal line. I'm not going to get into how it's calculated. It's using a bunch of different moving averages, taking the average between the two, and then calculating the difference, and that puts it on the signal line, over the signal line there. So whenever the MACD line crosses above the signal line, that's your buy. Whenever the MACD crosses below the signal line, that's a sell on a short-term basis. So imagine those two lines, the two moving averages moving higher and lower, which is represented, the difference between those two lines is represented by the histogram. Imagine that as your short-term trader application here. But for a longer-term application, you look at the level of 0, which can be down here at the bottom. And as long as those two lines are above the level of 0 on a long-term basis, that's a buy. And if they break down below the level of 0, that's a sell on a long-term basis. So that's what I was talking about, as you can utilize these no matter what style of investor you are. You can utilize MACD to help you time your trades a little bit better. AJ, yeah, I don't know what's going on. Facebook started up. It shows me I'm live on my end. It shows I have no issues. But everybody said that they can't find it on Facebook. So I'm not quite sure what's going on. It seems to be a Facebook issue. Gonna have to have our Facebook guru look into this and get in contact with them to see what's going on. But glad you could be here today. Hopefully the Jockey Club was well. Hopefully Glenn didn't close out my positions today. Let me know. It's streaming though. Yeah, I don't know what's going on with Facebook. All right, so getting back to it though. Looking at it, you can see lots of great opportunities on a short-term basis, just looking at the histogram. Here you had this run up right there, had another run up right here you could have taken advantage of, taking your profits right towards the top, right before the pullback. Got another slow incline right here, sell signal right there, another buy opportunity right at this pump, or this little bump right there. And then looking at the most recent one, You had a great run from about $4 all the way up to where it's trading at now. I actually just sold a couple of days ago. Where is that? Right about there on that big red down day at 627. So you made about $2 a share, about 50% move in what, a matter of a couple of weeks, maybe a month. 50% in a month, I will take that hands down. So yeah, on a short-term basis, you have a great look here. On a long-term basis, you've been above the level of 0, which can be seen down here at the bottom, this whole the whole last year. So you're holding in at the $1.57 and still holding in now to 618. This is the difference between long-term buy and hold and short-term, taking advantage of these little pumps and, basically scalping throughout the last year. Both of them can be extremely successful, and both of them are reasonable approaches to take when making money or when trying to make money in the market. So MACD is a great indicator, once again, that can be used both for long-term and short-term, and those are two different ways you could utilize that. Obviously, there's more indicators out there. Maybe we'll spend a whole day, in the next coming weeks, we'll do a stream on just technical analysis. If you guys want to see that, hit that like button, share this, let me know. The more likes we get, the more I know that you guys want to see a live stream on technical analysis with the mobile app. So let me see your guys' answers utilizing that there. All right. So now we've covered lots of different ways on maximizing your profits and knowing when to take your profits. Once again, knowing when to take your profits, you can use a variety of different things, different strokes for different folks. That's why I wanted to focus on a multitude of ideas for you guys out there. Hey, Bob. So what I'm looking, so going back through it, technical analysis is a great way to start off, especially for short-term trading and even for some long-term trading. You also can use things such as the RT, which can only be found with VectorVest. You could use the sell ratings, once again, with VectorVest. You could use a single moving average. You could use a pair of moving averages, or you can just use the general guidance of setting yourself a stop based on the 1% rule, and also setting yourself a target based on that 50% rule. One other thing I didn't say with that, combining it with the 50% rule. Set yourself a target. I know this seems like an obvious, but it's amazing. Over the 10 plus years I've been here at VectorVest, how many people I've talked to over the years that don't set themselves a target. They never know, they don't know what they're going to be happy with, and they have no goal in mind when they get into a trade on when they're going to lock that profit in. I know it sounds crazy, but you'd be surprised how many people actually do that and don't realize something so simple that can really add so much benefit to their trading and their investing. How about stochastics and RSI? Yeah, anybody who knows me knows I love stochastics. RSI is also great. Very first indicator I learned how to use. So yeah, if you guys want to see a whole stream next Thursday or, in the next few weeks on just technical analysis, smash that like button. Let me know through the likes. Okay. So getting back to it though, and getting back to the set yourself a target, everybody is different. When setting yourself a target, this is something that comes down to being honest with yourself. You don't have to put any answers in the chat or anything, but, have a heart to heart with yourself basically and say, what am I happy with getting as a return on an investment? If you're short-term, maybe you're shooting for 20, 30%. If you're a long-term investor, maybe you're looking for 50, 100, 200%. Whatever that answer is, make that your target for all of your trades, or at least for those trades that follow that goal that you're trying to set out with, or the goal you're trying to achieve. When you combine that target with the 50% rules we discussed earlier, you have the answer to success. Just to give you a little bit of insight or a little example or a basic example of how that would work. Let's say you're a long-term investor, you set yourself a target of 100%. Well, you had 2020, you bought in March, you've bought in, sold out multiple times that 100% probably at this point. But all of a sudden, this most recent run that you've gotten into, you're only up 50% now. Well, now the market's looking a little bit more turbulent. You're starting to see some fears coming into the markets. So then at that point, you're saying, okay, I'm up 50%. My target is 100%. I needed to use that 50% rule that Patrick talked about in the stream last week. So now, if this 50% gain turns into only a 25% gain or maybe a 30% gain, I'm going to lock that profit in, not risk it anymore, and then wait for a new buy opportunity based off your plan. This is what I was talking about, is they can combine together to help you maximize your trades, each and every one of them. So hopefully that answers any confusion on that. If you guys have any questions regarding that, feel free to let me know in the comments or in the chat there. I'd be glad to answer them. With that, let's go ahead and start to answer your guys' questions as well. Or your guys', let's take a look at your guys' stocks here today. So I have to scroll back up because I know a lot of stocks came in earlier. Let me get to it. Where was it? Where was it? Trying to find where they started off from. All right, apps. Let's go ahead and start with apps here. So we go back out of here. APPS. And we'll start with apps, work our way from left to right with the analysis, and then take our time with this one, and then I'll show you how fast it can really be. Also, I see the Nightbot coming in. I'm not used to having Nightbot because we don't have it over on our Facebook. Talking about our Twitter. I'm starting to get more active on Twitter, sending tweets out throughout the day, talking about the markets, talking about some of my favorite stocks to talk about. So if you guys are interested, look me up on Twitter. Let me find my information. You guys can follow me there. Let me go ahead and see where it is because I don't honestly remember. PR France 88. So PR France at PR France 88 is my handle. If you guys want to send me a follow, I'll follow you guys back. But feel free to follow. I'm becoming more and more active there, so it's a great way we can communicate back and forth when I'm not live. So if you guys are interested, feel free to head on over there and send me a follow, and I'll follow you guys back. All right, so apps. We use these 4 indicators at the bottom. Once again, they're cast on a scale of 0 to 2. Above 1 is good, below 1 is bad. RV is looking at the long-term potential over the next 1 to 3 years. At 1.9, that shows great long-term potential over the next 1 to 3 years. The RS is the relative safety. It's basically an indicator of risk, and it's looking at the consistency and the predictability of a company's financial performance. So with an RS above 1, that shows less risk. Below 1, more risk. At 1.35, that shows less risk associated with digital turbine. So therefore, that's favorable. And then we get to the timing though. Timing is the short-term, or the RT is the short-term price trend of the stock here. And above 1, the short-term trend is up. Below 1, the short-term trend is down. Once you own a stock and you're actually holding the stock, the RV and RS mean way less than when you're getting into it. The RT becomes the most important indicator once you own a stock, because once you own it, you want it to make you money. So if the RT is below 1, that shows us it's in a downtrend or it's not making us money, and therefore it doesn't make sense to hold on to it regardless of how good the stock is. Even some of the best stocks out there can have some downtimes. So at RT at 0.81 tells us it is in a decline right now. Great stock in a downtrend, unfortunately, though, so therefore not favorable here. Let's see, where were we? Getting back. Man, I love seeing all the people coming in on the YouTube side as well. I know Facebook is down, so I know there's a reason for it, but it's fun seeing that, seeing all the people there from the YouTube side. All right, BABA, let's go take a look. BABA. So BABA, poor long-term potential, about average risk involved with this stock. You're in a steady decline. Overall, the stock is not favorable here. XROF, all right, getting into the good ones here now. EXROF. So XROF, poor long-term potential, a lot of risk associated with it because it's a small cap stock. It's a newer stock. There is a lot of risk involved with this one, but the timing is also down. Really, the timing is flat. When you take a look at the chart, stock, yes, it's down from its highs, but over the last, 3 months or so, the stock has just been moving sideways in a tight channel between $3 and about $3.40, $3.50. So about a 50% or 50-cent channel that this stock's been trading on for the last couple of months. So, RT, I would say really more so flat than anything else. But overall, the stock is not favorable currently. Like to see that pick up hopefully in the near future. I do like the stock, but unfortunately it's not rated very favorably because it hasn't gone anywhere. JKS. Alrighty. Well, today, I missed one. Well, today ABBV crossed 50% loss of profits for me, but now is recovering. What to do? Constantine, plan your trade your plan. You're saying that now because it's recovering, but what happens later on throughout the day if the market continues to move lower and everything else continues to dump? Or what happens if, it's recovering today, but what happens if it wasn't recovering today? What happens if it's moving lower? Obviously, that answer becomes easier, but at the same time, follow the rules. Follow your plan. All right, JKS. Let's go ahead and pull that up. JKS, poor long-term potential, but a little bit better than average safety involved in this stock. You have a really strong short-term uptrend currently. Overall, the stock's favorable. Maybe we're going to be seeing a clean energy comeback very, very soon, especially getting closer to the fall. Also, as we've talked about in the past, maybe we could start to see a cannabis rally coming in very soon, with the new legislation that's potentially coming up. So DQ, great long-term potential, less risk associated with this stock. However, the timing is just a little off right now. It's moving slightly lower. Overall, great stock, but I need to see that timing pick up. DD. All right, DI. Let's go ahead and take a look at it. Poor long-term potential. A lot of risk involved with this stock. You're steadily moving lower. Overall, the stock is not favorable. I think that pretty much explains it on that one. Jay, so do you have a moment to hear the good word of Extro? May I come in? Extro is a phenomenal electric vehicle parts producer, where they're trying to become a parts producer with some of their technology that can expand the capabilities of batteries that are used in not only electric cars, but bikes, side-by-sides, motorcycles, anything that can be ran by a battery or anything that has a battery motor can pretty much utilize this technology. Farm equipment, the list goes on. Let's see. Enphase, sure, Juan. Let's go pull up ENPH. Enphase. So Enphase has good long-term potential. It has solid fundamentals or less risk associated with it. It's in a steady uptrend. Overall, the stock's favorable. If we go take a look, let's go change this out real quick. Go to graph settings, change the lower indicator to the RT. Zoom out to a 6-month. So Enphase has had a great run up all the way up to about 200, 210 plus. Sold off a little bit, about 50%. Got a new run here recently, pulling back a little bit. RT is dropping a little bit, but on a short-term basis, 3.8 turned negative as of yesterday. So you got a great run all the way from, where is that? 135, we'll call it, till about, when is that? Here, at 170. So a $30 run in a very short period of time. I'll take that. Not too shabby. But overall with Enphase, looking at it here, you had a slightly higher high. Looking at the candles, you have a lot of selling pressure shown by the upper wicks here on these two candles. Pulled back, tried to make a new run or a third run, created a lower high, and now lower highs tends to lead to lower lows. Well, today and actually yesterday and today, you have that lower low from compared to here. So therefore, you're starting to notice a transition from a push to some profit taking, essentially. And that's what we're seeing with this. On a short-term basis, you do see some weakness. On a long-term basis, you see a little bit of weakness as well. It's had a phenomenal run. This is a stock we've been keeping an eye on for years now, for at least the last couple of years. This was a stock we were watching when it was $19 a share. Now it traded in multiples of $210 a share. So that's a 10 bagger, if I'm doing my math correctly, just off of this one alone. On a longer term basis, so I don't like seeing this lower high that's being formed when compared to the highs back here around the beginning of the year. Now, maybe this could be temporary. Maybe we could see some new life coming in, especially if clean energy starts to pick up. But for now, you got to be a little careful with it. You do see some short-term risk. But if it does have a pullback, that could create a buying opportunity. You know, what goes up must come down. And when you have sell-offs or when you have corrections in the market, those create buying opportunities for investors to take advantage of good stocks at a cheaper price to capture more profit. Could you suggest on trading TQQQ with primary wave or DEW signals? I wouldn't do that. I wouldn't do that, Goldie, to be completely honest. You know, you could use the DEW timing layout on, let's say, QQQ. And when it has a buy, you could buy TQQQ. And when it turns to a down on that specific stock, you could, you know, possibly do SQQQ. I haven't tried it. I haven't tested it. Haven't done any back testing. Just initial thoughts. That would be the way I would approach it. But I would definitely want to paper trade that and test that theory out to see if it's even worthwhile first. You know, paper trading can help you do that. All right. Let's see. What do we have? CAMT. CAMT. So CAMT has great long-term potential. You have less risk associated with it. You're in a strong uptrend. Overall, the stock's definitely favorable. Once again, though, on a short-term basis, you start to notice this lower high here on the 28th of June. And then all of a sudden, lower low. Now, forming a downtrend. You could put a trend line on here if you wanted. But that is something just to be aware of. On a short-term basis, you are seeing some more volatility picking up. You know, one could say this is the last push to try to, you know, bait in retail so big money can take their profits. Who knows? But you do see some weakness coming in on a short-term basis on this one currently. So definitely something just to pay attention to when trying to maximize some profits. Let's see, GRWG. GRWG, great long-term potential. Decent fundamentals, so a little bit less risk than the average stock out there. However, the timing at 0.72 tells us it's still in a decline currently. Overall, the stock's favorable, but the timing is just not right. As I've talked about when we talked about the cannabis stocks or the pot stocks that we have when we built the watch list here for you guys, this is the time to keep an eye on these. Not necessarily jump on board with them, but start paying closer attention to the news. Start paying closer attention to this, the trading prices, because there was a big announcement that gave us that rally last year coming into the beginning of this year of, potential talk, or that is on the docket this year for talk about reforms and decriminalization. Everybody thought it was going to be the beginning of the year. Obviously, that didn't pan out. Pot stocks tanked after that. Well, we have this fall coming up when we have Congress back in session. That's the last time to be able to do it this year. So expect to, wait until we get closer to that point. Wait for a good buying opportunity, and wait until you start to see little tidbits being thrown out here or there about news, because that's really the main driving factor behind these stocks currently. All right, let's see. What do we have next? We'll do a couple more here today. We'll do two more. So we'll do CRPT. CPRT. Whoops. There we go. CPRT. So CPRT has great long-term potential, has less risk associated with it. You're in a steady uptrend. Overall, the stock's definitely favorable. And then last but not least, TTD. So we'll put that in here. So Trade Desk. You have poor long-term potential, but about average risk involved with this. You do have a nice uptrend forming currently on a short-term basis. Therefore, the stock's favorable. One thing here, just like we've been talking about with some of the other ones, As you can see, over the last year, you have a clear pattern of lower highs, lower lows, trying to break that pattern right now. But then on a short-term basis here, you have potentially lower highs being formed and now lower lows. Here on that candle, you can find it right there. You have a lot of weakness showing, a lot of selling pressure showing. So on a short-term basis, be very cautious with this one. Glad to hear that, Bob. All right, so with that, let's go ahead back to the overview, start to recap here. Once again, we're still 3 ticks into the red. The market still is bearish. We don't advocate buying any stocks at this time. As we scroll down, we can see the 3 red lights coming across the board. Price, RT, BSR, MTI still moving lower. Looking at the advanced declines, advances have picked up a little bit, sitting up at now 36%. Decliners pulling back a little bit, now up 54%. Still not that 2-to-1 ratio that we like to see. So be careful if you're considering trying to open a bearish position today. Looking at the major indices, the Dow's now finally hit that full 0.1% higher. NASDAQ down about 0.5%. S&P down about 0.2%. So S&P gaining a little bit of ground here. VectorVest Composite still down roughly about 1/3%. So not much change with the VVC. So that's the market review. Once again, I hope you guys enjoyed today's tips. I hope they help you, reevaluate some of your trading plans or help you develop your own trading plan to be more consistent in your entries and exits and help you focus on a systematic approach to investing rather than an emotional approach. So if you guys enjoyed today's stream, as always, don't forget, hit that like button, share this with all your friends, share this with all your family, turn on notifications over on our YouTube page. For every time we go live, because we do have another guy some small name guy by the name of Glenn Tompkins that I think he has a stream later today, maybe around 2 o'clock-ish or so. Just kidding. Yeah, he has his Trending Thursdays. If you guys have never participated in that, definitely check that out. And on that, take care. Adios. See you guys.